Welcome, everybody, to the Chinchilla Pickin' Podcast. It is January 11th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am here by myself this week. We're doing a very quick one. I'm just going to do a quick 10-minute break, if you will. You guys can listen to us on your break. We're not going to do a full 40-minute podcast. We're going to wait for Brandon to heal up. The reason why we had to miss last week is between Brandon, myself, and our loved ones in our lives. Just about everybody had COVID or is dealing with it. You may hear me cough once in a while throughout this brief 10 minutes here. And I just, that is the reason why we have been completely sick. I don't like the way I sound right now, but here we are. We're moving forward. We're trudging along. We're doing what we can. So there are no rules since it's just me and we're going at it. I'm just going to do a quick overview of what's going on, where I went wrong. I do have one thing to admit. I always like to eat crow. If I'm going to eat crow, I'm going to do it right at the beginning of the show. I want you to know where I make my mistakes. One thing I called badly recently, and it's been RIOT. I thought it would move up in the first week in January. It has not moved up in the first week in January. It has continued to go down because Bitcoin has continued to go down. I was wrong. Do I believe it's going to stay down? No. I believe Riot and Bitcoin are going to continue to go up. You're going to eventually make money. It's a hold at this point, unless you want to take the loss of whatever loss you're in at. That's your decision to make at that time. For me, since I have enough funds to be diversified, I'm just going to let mine sit until it turns positive for me. That's the big one I got to eat crow on. That's the one I've gotten wrong. I just want to come out and say that right now. I've made a bad call on that, thinking it would go up. If you're only down, if you're down 10% or less, go ahead and pull your money out, take that 10% hit. I apologize for that. Doing the best I can. But if you're down a little more than 10%, it's going to go back up eventually. Bitcoin will. Goldman Sachs came out, I believe it was last week on Thursday, and said that they're going to go ahead and they expect Bitcoin to hit $100,000 a coin. So Goldman Sachs is heavily invested, and if they're heavily invested, I believe it's probably a good, solid, safe investment there as well. Some things to look at. So from our last podcast, the one with Nick and I, we were on here before and we were talking about oil and some of the calls I made. I said buy rig below $3 for a good day trade. Rig did dip below $3 and then it went back up. As of today, at one point, I saw it at 335. So that would have been a great 10% day trade, right? Swing trade now, not day trade, but swing trade on rig. So you could have made up your 10% loss if you were on Riot and you got out. You could have done the rig call I called last time. That was 2 weeks ago, but the oil was a question, and still today it was brought up. It's funny how we talk about rig counts and everything here, and we start talking about the website you guys can go to and get this information on these rig counts, and then on CNBC we go ahead and we get rig counts being talked about and where to go to find them and the importance of rig counts right now, because they're seeing the same things that we're seeing. We're seeing that the rig counts were much higher, over 1,000 rigs pumping out oil back in the day, and it was about the same price as to where it's at now with just 500 rigs pumping out oil. So we found better ways to get the oil out of the ground that are more effective and cost effective for the companies, or are the companies trying to go ahead and spend less money to get the oil out, thus increasing their profits so they could be more profitable? We know that they have these wells available to start drilling and go ahead and get the rigs going. The wells are available, the ones that were approved before the current administration took over and canceled all approval on new wells. Before that movement happened, there was many that were available to go ahead and pump. So the oil companies, I believe, are trying to pump up the profits right now, which that's their call to make. Nothing illegal about that, but that's what they want to do, and that's what they're going to do. They're going to go ahead and use this opportunity as it's given to them. So that means oil stocks all went up today. So I did make some money because I was calling that in the last show. That was 2 weeks ago when we had the last show due to COVID, is when I covered the oil, right? So right now what we're looking at is everybody's redoing their books, even Warren Buffett, man, right? Charlie Munger and Warren Buffett. If you don't know who Charlie Munger is, he is Warren Buffett's partner, right? So Brandon has sent me this screenshot of one of Charlie Munger's newest positions, and he had just gathered a big position in Alibaba of all places. Brandon's not on here. Someone's got to talk about China. Um, does that mean that we think Alibaba is going to go up this year? Is this the year that finally Alibaba starts moving in the right direction and not the wrong direction off of its all-time highs? Maybe, maybe. I'm still too concerned with the current government, the way they did Didi. I don't like the way they handled that situation. I believe they still have a tight grip on all the companies there, and with all, even though Jack Ma is very outspoken, I don't believe he has enough power and influence in the country to go ahead and continue to operate that way. He has to turn tide and follow along with them. So, am I buying Alibaba? No, off that news. But you're going to see the financials. You had the Fed on there today, and they were talking about what they're going to do with what we were talking about all last year. Brandon and I came on here many times. We talked about the Fed and how many billions of dollars they were spending buying bonds and buying mortgages. How many billions of dollars? Now they're coming out here saying home builders are going to have a bad year. Why is that? Well, I mean, if the Fed's no longer spending $20 billion a month buying mortgages, I mean, someone's got the private sector now has to buy, and the private sector is not going to buy them unless they're actually good. So now you have to have good mortgages, right? Now you actually got to produce a good product. So that means you're probably going to have less mortgages. That's why they're saying that the home builders aren't going to have the same year they had last year, the year before. That's one way to play that. Another thing to look at here, going forward, something maybe it was a big jump today and everywhere across the board, right? So everywhere had a big jump up. It was nice. The financials had a few big jumps up recently. I think the financials are right where they need to be for the meantime. They're going to channel right in this section that they're at right now. I don't see, because right now on my watch list, just so you guys know what I'm looking at, I got all the oil, I have financial companies, and then I got a few other ones I pick and choose, right? There was a mention that of a lot of calls on Tesla heading 1100 by this weekend. I don't know if that's going to be true, but I tell you what, though, I mean, you probably are going to get a good 3 to 5% return on Tesla over the next couple of weeks. So if that's a swing trade you want to make, that's a swing trade you're gonna make money on. So if you're willing to let money sit in there for 1 to 2 weeks for 3 to 5%, go ahead and do it. Tesla's a good call. That'll be my one call for today, guys. Watch the headlines. The headlines are really going to move things going forward, because what you're looking at is people pulled out at the end of the year. They want to go ahead and rebalance the sheet, get in for a new year. They want to pay taxes on that money now before tax laws change. They want to rebalance, right? So now you're going to see people starting to invest. What are they going to invest in? They're going to be picky. They're going to be choosy. Watch the headlines, see where things are happening, find some good, solid companies. There's a book out there called The Warren Buffett Way. I love that book. Fourth edition, Warren Buffett. A lot of people was like, well, he's slow and he's old and he does everything slow. I'm like, look, you don't have to always do it slow, but that same philosophy you could take down and day trade with, which is you find a value company that is undervalued at the current moment. And in day trading, it's at the current macro moment based off the emotions of the market. And then I know it's going to go higher. That's what I look for in day trading. The same principle, I just bring it down to the day instead of over time. You have to look for value companies. Tesla is a value company. It's going to go higher because if I put money in it and it drops down, you know, it's going to go back up. But you save cost basis, guys. That is one thing I do want to mention on the Tesla call, guys, that I'm making today. Cost basis. Save 10 to 15%. Don't go all in. Save 10 to 15% to buy when it drops down lower. All right. I appreciate you guys listening. I told you this would be a short one, just something for you to listen on your break. We're going to get you a full-length podcast later on this week. Hopefully, after my voice sounds better and Brandon is feeling a little bit better, we could get on here and actually do a full podcast for you and go in detail. This was just a quick thank you for listening. Thank you for always following us. Here you go. I appreciate it, guys. Love you. Good luck. We hope as always you've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.